Well, good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Tuesday, April 19th, 2022. And our top story today, new crypto guidance rewrites the rules for 401k self-directed brokerage windows. Well, joining me now to discuss this and a lot more, Austin Ramsey is a journalist with Bloomberg Law. Austin, great to see you again. Thanks so much for joining us this morning.
Thanks, Jeffrey. Always appreciate it and look forward to it.
And I hope spring has sprung where you are in Washington, D.C. Okay, let's talk about this new cryptocurrency guidance from the Department of Labor. I think it caught a lot of people off guard, and I think you've covered it, and we've covered it on the show. But now it has an impact on self-directed brokerages within a 401k plan. Before we get into the who, how, why, what is a self-directed brokerage plan? Self-directed brokerage in a retirement plan?
Sure thing. So a self-directed brokerage, or commonly sometimes referred to as a brokerage window, is an investment option on your 401k lineup that gives you access to the broader investment market. So think of it as being able to trade the stocks and bonds, mutual funds, ETFs that you would be able to access if you had just a normal brokerage account through a bank or some other type of brokerage dealer relationship. But instead of accessing that as a retail investor, you're accessing it as an institutional investor through your 401k plan. Now, what's really critical about the way that your employer or the plan sponsor treats that brokerage window, at least historically, is that they don't have a fiduciary responsibility, or they've always understood that they don't have a fiduciary responsibility to monitor the individual investments within that brokerage window. And that kind of makes sense if you think about it. I mean, if you're accessing a brokerage window that doesn't have any restrictions on it, then that means that you have the ability, and theoretically could, invest in hundreds, if not thousands, of individual stocks or mutual funds, ETFs, all kinds of individual types of investments that you might want to invest in. And it would be impossible for your employer to track and vet each and every one of those.
Okay, Austin, now that we've got this baseline, what does this Department of Labor cryptocurrency guidance, with many have said for the first time, they've warned about a particular asset class or investment vehicle or investment type. I really can't remember this anytime them doing this. But what does this mean for people, for plan sponsors, fiduciaries that have a self-directed brokerage account in their plan today?
Sure. So you're right. This cryptocurrency guidance was unique in a number of ways. For one thing, the Department of Labor got as close as possible to saying that one type of investment, one asset class, is banned as really they've ever done before. It's kind of unique. Earlier this year, they issued similar guidance, kind of warning plan sponsors of the dangers of private equity in 401k plans, as well as defined benefit plans like your old style pensions. But one of the unique differences between the private equity guidance and the cybersecurity the cryptocurrency guidance, is that with private equity, the Department of Labor said, perhaps this isn't a good, obviously I'm paraphrasing here as well, but, perhaps this isn't a good idea. Perhaps it could be bad for investors in a 401k plan, especially if those investors, and especially if the fiduciary, doesn't have experience, is not, an investor with adequate experience in dealing with these kinds of asset classes. With cryptocurrency, there was no perhaps, there was no maybe, there was cryptocurrency, is volatile. Cryptocurrency can be dangerous. And for those fiduciaries who choose to ignore that warning, they could very likely face an investigation from the Department of Labor if they choose to allow these kinds of investments in a 401k plan. Now, that's unique. That's significant in and of itself. But then the Department of Labor went further, and they actually, for the first time, identified brokerage windows as a type of avenue by which participants may access these kinds of benefits. And we know that this is true. I mean, anyone who keeps a close eye on 401k plans knows that I don't know of any 401k plans that are offering cryptocurrency alone as a default investment alternative, as essentially one of those investment options on the menu. Almost all participants in 401k plans who have any access to cryptocurrency are doing so through brokerage windows. And that makes sense. We've already discussed fiduciaries don't have a responsibility, or they didn't think they had a responsibility to vet those kinds of investments. So it would, make sense that participants are accessing them that way. But now the Department of Labor is saying, really for the first time, that, perhaps fiduciaries do need to know what their participants are investing in through these brokerage windows, if at the very least it's whether or not they're accessing cryptocurrency. And while that may seem like it's sort of a tiny detail, just one asset class among many that participants could access through a brokerage window, it's the difference between fiduciaries having a responsibility of knowing what their participants are investing in through these brokerage windows, or not knowing what they're investing in. If you know they're investing in one of many asset classes, it would make sense that the Department of Labor is really changing the name of the game here and saying that, well, they can do this with any type of asset class. And maybe the type of relationship that plan sponsors have had with participants in brokerage windows is changing for the first time.
Yeah, it's, as you said, Austin, it is a slippery slope. And so when you set up a self-directed brokerage account, my experience is that you really have an option. You can make everything available, meaning stocks, bonds, I guess cryptocurrency, ETFs, etc. Or you can curtail and just make it external mutual funds. Now, it depends on what attorney you talk to, and if you put two attorneys in a room, you get three different opinions. I kind of took that from a quote from Truman on Economist. But anyway, if you start to curtail what you can invest in, do you become a fiduciary? I think there's some different feelings there. So what is a plan sponsor? I would assume you're getting pushback, or not you, but they're getting a little bit of pushback from some of the benefits organizations, the trade groups, consultants, advisors, people who saw this and said, oh, geez, this is going down a real slippery slope.
Yeah, that's absolutely right. And you bring up a good point. There are some plan sponsors that already choose to curtail investments in some way. I've spoken with a lot of attorneys who think that in and of itself is a bad idea, at least under the prior understanding of brokerage windows that we always had. The idea being that if you curtail any particular investments, that is starting the same slippery slope that perhaps the Department of Labor has started with this, brokerage window related guidance. I don't have the answer. It is a fraught legal debate at the very least. But because that in and of itself, the idea of whether or not you should curtail any investments at all, choose to only allow your participants to access, say, mutual funds, which is a common type of constraint that a plan sponsor might put on a brokerage window. If that in and of itself is so contentious, that only goes to show how the Department of Labor weighing in on this can only be more contentious. And so, yes, I mean, we have a number of letter writing campaigns that are occurring right now. We have many of the trade groups are trying to set up meetings with the Department of Labor to talk about this. I think that there's a concern among many of these that this is the start of something that maybe the Department of Labor isn't necessarily saying the rules have changed, brokerage windows are now no longer what you thought they were, but instead the Department of Labor is kind of opening a door. They're saying, okay, with cryptocurrency alone, we're going to require you to take a more careful look on brokerage windows. But by opening that door, that may mean that a year from now, it's private equity. And a year from then, it's something else. And maybe they're going to extend this to defined benefit plans. And it's important to note here that, pension plans, they pretty readily access at least private equity investments. They're certainly familiar with alternative investments as a way to hedge their overall investment portfolios, especially against fraught stock markets like we see right now. I mean, it's, we're seeing a lot of turmoil in the general, S&P 500. I will note that the Department of Labor, Tim Hauser, who's kind of the chief investment officer, or the chief, the second in command, if you will, of the Employee Benefit Security Administration, he spoke to a group, an industry group just recently, and said that the Department of Labor does not want plan fiduciaries to look at this guidance and say, oh, we are changing the name of the game on brokerage windows.
Yeah.
They said kind of that latter option. He said that, brokerage windows, allow in some cases access to cryptocurrency, and therefore plan sponsors should look just at cryptocurrency and begin that process of perhaps vetting and limiting brokerage window access if necessary. But that opens up that question of, if the Department of Labor can do this, what else can they do, and what else will they do?
Yeah. Austin, I need to take a quick break. I want to continue the conversation over the break. When we come back, we'll talk more about the fallout of new cryptocurrency guidance from the Department of Labor. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you over 50? Would you like to get up to 33% more income in retirement? Then call now for this free book, Annuity Do's and Don'ts for Baby Boomers. This free book reveals little-known secrets about annuity strategies that will help you make the right choices before buying an annuity. Call right now for your free book, and as a bonus, we'll also throw in a free annuity rate report, both absolutely free, for calling Annuity General today.
Call 800-504-8194.
Welcome back. We're talking this morning to Austin Ramsey of Bloomberg Law. Austin, thanks so much for sticking with us this morning.
Appreciate it. Always a fun conversation.
Yeah, this is weedy for some, but if you have a 401k plan, you may have access to a self-directed brokerage. I guess, kind of when I'm thinking this through, Austin, the statistics on self-directed brokerage, not really a high usage, right? It's typically, in a typical plan, when you look at the averages, less than 5%. So we're not talking about a lot of money in plans, but it might be typically as the noisiest participants, people that are very noisy, think that they know more than the market and maybe have some assets, or they might have a financial advisor, et cetera. With all this tumult, and I know there are industry groups that are advocating, talking to Tim Hauser, others at EBSA, have you heard people say, look, it's not even worth it to have the self-directed brokerage anymore if you're going to put all these responsibilities on us? I know that there are going to be people that are upset, but I'm going to wash my hands of it because it's going to get in the way of me offering a plan.
That's a great question. I think that we're so early on in the idea now that the Department of Labor, EBSA, might be regulating brokerage windows a little bit more carefully or a little bit more forcefully than they have before. I think we're so early in that we haven't actually seen any fallout in terms of the way that plan sponsors are choosing to offer them or not. However, I will bring up one important point, and that is that although mostly brokerage window use is confined to your experienced investors, you're talking about, look, if your brokerage firm, for example, has a 401k, it's pretty likely that they're probably going to offer a brokerage window because the types of employees that you have, they are going to have experience with the market. We also see this a lot with law firms. We see it sometimes with medical facilities, interestingly. Sure, there are certain types of industries that are more likely to offer brokerage windows because of the education level, for example, that participants have, the experience with the stock market that they may have. That is one bucket that I think of for brokerage windows, but there is another one, and I don't necessarily have a way of quantifying this, but I do know that this is one of the reasons that brokerage windows were really thought of or invented in the first place. And that is the type of investor who invests for a cause. We're talking a lot these days about environmental, social, and governance investing, ESG investing. I think you and I have talked about it in the past, in fact. There's a lot of reason to believe that, ESG specific funds are not going to be the type of funds that you can get access to on your typical 401k right now. I don't know of any major 401k provider, any major record keeping firm that is offering, a large selection of ESG specific, index funds, for example. However, if you are the type of investor who chooses not to put any of your money into the Exxons, into the BPs of the world, you may choose to wash your hands of mutual funds altogether because, if you're tracking the S&P 500, you're going to, some of your money is going to be touching, major energy producers. And maybe you want to greenwash your 401k yourself. Okay. And if you want to do that, a brokerage window sometimes might be your best option because that's the only way that you can ensure that your money is only going into certain companies. Another way that investors may, choose to direct all of their individual investments is under Sharia law. Some, religious investors, they may choose, if they have a certain belief, they may believe that, under religious texts, they cannot put their money under certain, into, companies that are not halal, for example. If you have those kinds of beliefs, a brokerage window literally is the only way that you can invest. And so, that is the type of investor I think that some companies that offer brokerage windows feel like they have to offer a brokerage window. If you have a number of employees, for example, who have a certain set of religious beliefs, and that number of employees is high enough, I mean, you're talking about whether or not you have adequate participation in your 401k plan. And so, yes, it's true that by and large, brokerage windows are often accessed by, investors who have some experience. It's also true that sometimes brokerage windows are the last resort or the only resort for certain investors who have beliefs or who have, their own feelings about the stock market and want to ensure that their money is going in one way and not another.
Austin, there's a lot of education that is being, a lot of investment in education, I should say, from both the plan sponsor, the record keeper, financial advisors. Does this open up an even greater need? Is what you're describing, and again, if more people go out and they cannot get an ESG or sustainable fund or a cryptocurrency in their plan, and then they're going to turn to the self-directed brokerage. There are costs associated with doing trades. Usually, there's a cost to having an open account. You've got to move money into a sweep account. There's a lot of machinations behind that. But is this going to require more education? And are we going back to, instead of having multiple funds on a 401k platform, now we're opening it up to thousands upon thousands of investments? Where do you draw the line in terms of education?
That's a great question. And in fact, education or financial wellness is another kind of contentious area in terms of Department of Labor guidance right now. We know that the Department of Labor is at least looking at their definition of a fiduciary. And there's a lot of concern that if you get if you go overboard on the financial education side of things, that you're going to wrap your record keepers under, a fiduciary liability if they start making recommendations, for example, about the types of investments that you're making. But you bring up a really good point, and that is that, cryptocurrency is one of those asset classes, like perhaps private equity, a decade or so ago, that there is a lot of popularity around, that there is a lot of interest in by participants. And interestingly, we have seen in some cases, at least anecdotally, participants who are choosing to get out of the qualified retirement plan space just to access cryptocurrency. And that's something that's pretty surprising and new, at least to me. One of the reasons, in fact, that the Department of Labor says that they have issued the guidance that they've issued is because some participants are choosing to, if they've had a qualifying event, like they've retired or they've, ended their employment with a certain, employer. If they have that type of qualifying event, rather than choosing to say roll over one 401k into another qualified 401k, they're choosing to roll that 401k into an IRA that is not qualified. In other words, it's not regulated by the Department of Labor, just so that they can have access to what we are now referring to as a digital IRA. And these are IRAs outside of the Department of Labor's, regulatory landscape that does give access to cryptocurrencies. The IRS has said that is allowed, that, these IRAs can, access cryptocurrency just like any retail investor could. But that raises a really interesting question, which is, if there is enough interest by the participant, no matter how much the Department of Labor says that they don't think investors should be investing in cryptocurrency, if that interest is high enough, are you just going to drive people out of the qualified retirement market? That could be dangerous, because one of the ways that the only way really that the Department of Labor regulates these plans is under that strict fiduciary liability that we've been talking about. And that doesn't apply to IRAs. That doesn't apply to non-qualified plans. And so I think we're seeing for the first time a way by which the Department of Labor could regulate so much that they lose access to regulating retirement plans at all. Yeah. I don't think we're necessarily there yet, but it is at least the first time that I've seen where the Department of Labor has gotten so close to banning an investment that they're driving people out of the market. They're so interested in cryptocurrency that they're going to get out of their workplace 401k plans just to access it.
Yeah, I mean, there are unintended consequences to regulation, and I think you're explaining one. I guess we've got about 2 minutes left. Real quick, next steps, and I want to bring up how the department's going to. Sounds like there's a letter writing campaign to the Labor Department, but also if you're the Labor Department, how do you reconcile that the SEC, the IRS, so the IRS wants to tax crypto. The SEC has basically said, okay, we think that there could be crypto, there should be a market, but it needs to be regulated. And then you have the central bank, the Federal Reserve, saying, okay, well, there should be central bank digital currency. So so what do you do if you're a sponsor and you're just working on your little retirement plan? Say your plan's only $10 million and you got to put up with all this stuff to figure out. I mean, that's a burden. That's a regulatory burden that you have to, on top of what you're already doing for your business.
Well, the Department of Labor would say that regulatory burden is so great that you should avoid cryptocurrency altogether. Now, that may not always be an option for every plan sponsor. I think a lot of plan sponsors look at cryptocurrency as a way to hedge their bets on the market. give participants access, for example, to a way to kind of soften the blow of, energy prices, the war in Ukraine right now. Look, yes, it is true that cryptocurrency investments are extremely volatile. They're very difficult to value right now. But it's also true that the market is very volatile right now. It's very difficult to measure all kinds of volatile investments, including private equity. I don't have an 8 ball. I don't have the magic advice for plan sponsors. But I would tell you this. I would say that the Department of Labor right now is saying that cryptocurrency is a bad idea. And one of the reasons that it's a bad idea is because of the regulatory market and regulatory uncertainty around it. If you're struggling with dealing with that wave of regulation with the cryptocurrency space right now, maybe it's a bad idea to add to your worries with the Department of Labor investigation, because now, at the very least, that's what we know is next. We know that the Department of Labor is interested in investigating plan sponsors that have chosen to include cryptocurrency in their plan lineup or will choose to include cryptocurrency in their plan lineup. So if it's all getting to be too much at this point, at the very least, maybe heed the Department of Labor's advice, because if you don't, the Department of Labor at least says that, more worries to come.
Yeah. Well, Austin, I actually have an 8 ball right here. Let me shake it up. You know what it says? It says, tune in to Bloomberg Law and the Broadcast Retirement Network to follow this story on a regular basis. That's what it says. Austin Ramsey, great to see you. Thanks so much for joining us. Great story. And we look forward to having you back on the program again very soon.
Thanks, Jeffrey. As always, have a good one.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the latest curated news in lifestyle, wellness, finance, tech, so much more, and all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to see our latest content? Search our archives. We'll check out our website and our streaming partners, Amazon, Roku, Samsung. There's over 100 more. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
But if you're tired of the same old
Now is your opportunity to co-create content around any topic on the first lifestyle and wellness network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.